Good day, everybody. My name is Dirk Hartig from the Prime XPT Trading Academy, and welcome to this week's first episode of that crypto show, where we do a weekly forecast for cryptocurrencies. So join me in today's show to have a look at what is going to become important this week for cryptocurrencies and where prices likely might be heading. Leave us a like, subscribe to the channel, and I'll see you again in around about 30 seconds. Welcome back, and thank you for leaving us that like. Let's kick off by having a look at the Bitcoin chart because I think it's important in a market like this, which is an extended sideways range at the moment, to especially concentrate on Bitcoin because it's going to be very hard to find a currency in the top 10 or top 20 cryptocurrencies out there that really diverts from what Bitcoin is doing at the moment. So after we saw an attack on Saturday on the 49,000, Bitcoin decided to go into the bear mode again, and we returned into our solid support zone here down around about the area between 47,000 and 44,000. So basically the extended sideways range that I've been talking about since we had the big dump down from 53,000 to 42,000 roundabout. Yeah, it's almost now 2 weeks ago. And we had this extended sideways range zone between 44,000 on the downside, 47,000 on the upside. Yes, last week we broke out of this zone to the north. We tried to get above this area of around about 48.5 to 49,000 a couple of times, failed to do so. So this area here at 47,000 started to act as a support. This night, the support finally broke. Looks like some traders out there either lost their attention or their patience in this case, or we maybe even saw some liquidations taking place again of long traders that built up long positions once we broke out of this zone and had to force the liquefy their positions. So at the moment, really the pressure is on the downside again. But in my opinion, things look a little bit more bleak than they really are. What we are really doing is we've just so far returned into the sideways range. As long as we significantly do not go underneath 44,000, preferably by end of day basis, there's nothing really in danger. And as you can see here also from the daily chart, with solid support zones, and remember those support and resistance zones are from on-chain data, which we are going to look at later, of course, as well, really show that in this area we have large hands, deep pockets buying and buying over again. As long as we don't really break on a daily chart here underneath the 42,000, in my opinion, we are still in an okay market and nothing really out of the ordinary is happening, especially since we were expecting, an extended sideways range for September on the cryptocurrency markets, like I proposed so many times beginning of September. So really, if we want to scroll out here a little bit, and look forward, just according to the charts, I wouldn't be surprised to see a continuation pattern of the same, like maybe sometimes a little bit up here, sometimes a little bit down here. But overall, as long as this area between 44 and 42,000 US dollar holds, nothing really to be so worried about. Of course, moves like this down 5% in just a matter of minutes or hours again always looks very scary. And I'm very sure we'll find on the mainstream media again also news outlets reporting about Bitcoin yet crashing again. Let's have a look at the fear and greed index. You guys know I'm a big fan of sentiment trading because I think it shows you largely, at least in the middle of a trend, the right direction. And it's completely neutral at the moment, meaning like bears and bulls are really holding the balance, which also supports my theory of this continuation pattern for this week. So really propagating like nothing really new. I wouldn't be surprised though, however, if we stay this low if we see it a bit lower tomorrow, because what we've seen after the crash is that the sentiment reacts very quickly, and with large rises or large double-digit falls to a change in the Bitcoin price that is like higher than 3, 4, 5%. Let's look at the on-chain data, and we also don't really see anything new. For everybody out there that doesn't know what on-chain data is, this is the data you can extract from the blockchain that, for example, shows you where a majority of people have bought Bitcoin and not yet sold those again. So this is called this UTXO, realized price distribution. So this is from Glassnode, freely available. So everything I tell you here, you can also look up for yourself. If you don't believe me, if you don't want to do your own due diligence, which of course is very important. And again, those three zones we've seen prior here on the chart, the one being here in the area between 53,700 and 59,000, we still see a lot of people holding coins that were bought there back when we attacked those highs up to 64,000 between March and May 2021. So this acts as a really quite strong resistance at the moment. Should we decide to go back up there, we could expect at least some Bitcoin buyers up there, like getting out of a position break even again. The same, but a little bit lighter, we have here at the moment between around about 46 and 52,500 US dollars, where also, once we went up here from the lows at 30,000, we saw coins accumulated. And before we had this big flash crash, 1 day flash crash there, really due to over leveraging that was. So, and this is exactly what we saw once we reached somewhere the middle of this area last week. We saw like, okay, there is selling pressure. Seems like some of the coin holders there really lost their patience and decided to sell and put pressure again on the market. Because remember, the volume of the market here really is not that high at the moment. So if you have deep pockets, it's fairly easy really to influence the price at the moment for a larger institution. So nothing new really, the picture hasn't changed there. One thing that is really good, after beginning of September, we saw a bit of drop in whale holdings. So whale holdings are entities that have more than 1,000 Bitcoin in their holdings. So so-called whales, really the guys with the deep pockets, I always call them. And this chart is filtered by all known entities. So known entities such as cryptocurrency exchanges that of course hold large amounts of Bitcoins for their clients that are not in like their property, but their client's property. So you can filter those. Normally that's like common knowledge which wallets those are. And you can filter those out to really get a view on entities that are not known. So maybe early miners, early adopters of Bitcoin that accumulated more than 1,000. And we see at the moment still that those entities are purchasing Bitcoin at these prices. And these might be sometimes those large green candles you see in between. So if we, for example, in this area here, we had like a crazy move with a large candle up. That's always an indication of like larger entities buying. And usually this is something good, because that means the market is more in the hand of the short-term traders at the moment, with the long-term traders using those prices to accumulate. And usually the longer-term traders are the people, the so-called smart money, although I don't like the term really a lot. They are not smarter than everybody else, but they show to have more patience and be in for the long run with Bitcoin. Outside of the cryptocurrency area, there's really still ongoing this the impending Chinese crisis with the real estate developer Evergrande. And I reported on this early last week. If you haven't watched the video, please go back and watch it. It's called "Is There a Crisis Brewing in China?" And so Evergrande, being a Chinese property developer, real estate developer, 300 billion US dollars in debt, and they are on the brink of default. So they cannot compensate their liabilities anymore. And they are thinking now of compensating, of paying investors back by transferring real estate to those investors. But the question really is where there's the possibility of a collapse of the Chinese real estate market could have a domino effect. And I said last week, if that really is the case, if the Chinese government doesn't step in like the US government did in 2008 during the financial crisis after the collapse of Lehman Brothers, we could see like a Chinese Lehman Brothers situation brewing there. And this would lead to the euro US dollar, which you see here top left, probably becoming stronger. And we saw this tendency a little bit already in the last days. Yeah, we're heading down there at the moment towards this area of 116.5. And if this really kicks off, I wouldn't be surprised to see euro dollar below 110 again, because this is a risk off scenario. And in a risk off scenario, people are looking, institutional investors are looking for so-called safe haven assets. One of those is buying the US dollar or buying US bonds, which you need a US dollar for and exchange your local currency to US dollar. We also should probably see then a reaction in the Standard & Poor's and the S&P 500, which also is a little bit on the decline since September. Nothing out of the ordinary. Friday we saw a bigger move down, which shows also that the market is a little bit afraid. Like, investors don't want to hold on to the positions over the weekend because they don't know what is going on there in China. Is China going to bail out Evergrande, or are they really going to collapse and they are just going to let nature take its course? Other thing to watch here is gold. So if a crisis is brewing, we should see gold rushing towards 2,000 US dollars again. It's not doing that at the moment. So a little bit of odd behavior here. Same with silver. If we see this crisis brewing up, we could see silver heading again to 30 US dollars or trying to break the mark of 30 US dollars. So this is really the thing we have to look at. If we see a normal market behavior, I wouldn't be surprised to see a continuation of the sideways pattern between round about 44 on the lower side, 47 and maybe 48 and a half on the upper side in Bitcoin for this week. If we see really that this Chinese real estate crisis is not resolved internally, meaning with the Chinese government in, and maybe we see indication of it having effects also on other economies. I'm looking there especially at the USA, of course, and the Eurozone. Then we probably would see some more action. And in that case, I would short term also expect more downside in Bitcoin, because by the end of the day, it's perceived by institutional investors still as a risky asset. So, other than that, Wednesday, very important also, the interest rate decision of the Fed. So nothing really expected there. More interesting what Jerome Powell is going to say in the statement after this, if we are going to see a lot of liquidity being pumped into the system. We will keep you updated, and we will see each other again tomorrow morning. Until then, please stay safe and remember to always use the stop loss. Goodbye.